the tortoise and the hare. We all love the speed and the agility of the rabbit for the race, but there's a mystery to the success of the tortoise that is so powerful. Slow and steady wins the race. Today's video is brought to you by an amazing company called HelloFresh. We recently tried HelloFresh and absolutely loved it. Awesome meals and convenience you won't believe. We'll show you more in a minute. Is Palantir going to multiply your money over and over? Is it going to spin its stock price wheels and slip and slide all over the place? Is it going to get some traction and begin to build profits for years and years? Those are today's questions. This is the MoonShot Money channel. I'm Chase Vickers. Are you ready? Let's go. Welcome back and thanks so much for watching today. We really appreciate each and every one of you. It helps the channel out immensely if you hit that like button and subscribe. Before we get into this new Palantir information that we're anxious to share with you, we want to tell you about HelloFresh. They're a meal kit company that shops for you and delivers everything you need right to your front door. You choose from over 25 mouth-watering recipes, and HelloFresh sends you all the pre-measured ingredients and recipe cards for an on-the-table, 30-minute delicious meals. To show you how amazing this is, me and Isaac are going to cook a meal using our HelloFresh delivery. We're going to go to a place that we've never taken you before. Let's go to the kitchen. Oh look, the HelloFresh box came today.
Oh, sweet. Starving.
Alright, let's see what we got. Alright.
Buffalo spiced crispy chicken cutlets.
White cheddar Wonder Burgers and Old Bay fries.
Tex-Mex pork and pepper enchiladas. I'm gonna say let's do the burger.
Burger? I'm down with it.
Let's do it.
Put this in there. Oh, here's the burgers. Okay.
Oh, they're all labeled so you know which one's which.
Oh yeah.
Sweet.
Alright, dig in here. An onion.
Alright.
Bun. Cheese, ketchup, mayonnaise.
This is gonna be fun. We should call Shanoa. Tell her to come.
Yeah, it's a good idea. Call her.
Let me call her.
Call her up.
Hi guys.
Shanoa!
HelloFresh is here?
Yeah, this looks like fun. Let's do this together.
Let's do it.
All right.
Yep. This is good.
Good?
Yes. I can't believe the three of us made a meal that tastes this good.
It's amazing.
Unbelievable.
Thanks HelloFresh. Those burgers were delicious and so much fun and easy to make because everything was already taken care of, except the cooking. In our videos, we say earn more, save more, invest more, and give more. And our focus is on giving. That's another reason we love HelloFresh, because they donated over 4 million meals to charity in 2020, and HelloFresh is continuing to step up their donations in 2021. A perfect example of giving more. Now, go to HelloFresh.com and use our code MoonShotMoney12 to get up to 12 free meals across your first 4 HelloFresh boxes, including free shipping on your first box. Happy cooking, everybody. You're absolutely going to love it. Now, let's go dig into this brand new Palantir information. Palantir's stock price seems to be stuck. The price in April 2021 is the same price you could have bought it for in December of 2020. That's 4 months of nowhere fast. What in the world is going on with Palantir? Palantir CEO and co-founder Alex Karp recently sold $10.4 million worth of the company's shares in a transaction intended to cover the tax liability tied to the vesting of certain restricted stock units. The reason for the sale was not because of his losing confidence in the company. Actually, it was the exact opposite. Karp sold 461,534 shares of Palantir at prices ranging from $21.55 to $23.54 from March 29 through March 31st. Palantir's co-founder, Stephen Cohen, made a similar filing, disclosing the sale of 173,595 shares for the total proceeds of about $3.9 million. His stock sales were in the same time frame and likewise reflect automatic sales for tax purposes tied to the vesting schedule of restricted stock grants. Karp is likely to sell many more shares in the coming months, but listen to the reason why, and it might just explain. According to the company's S-1 filing for its direct listing, Karp has 60.9 million stock options granted in 2009 with strike prices of 10.3 cents that will expire on December 3rd, and another 8 million options granted in 2011 with a strike price of 85 cents that also expires December 3rd. Exercising those options will cost Alex $12.8 million. In return, he will receive stock worth $1.6 billion. That, my friends, will create a mammoth tax bill, and Karp is likely to sell a substantial portion of those shares to cover the liability. So by selling millions, he's making billions. I think any of us would take that deal in a heartbeat. But this is one of the reasons for the stock price being stuck for a season. Stock shares being dumped into the market. The lockup period came to a close, and we knew there would be a huge sale internally. Listen, for like 17 or 18 years, these early employees have been working just to have the chance to vest their stock options and actually cash some of them out. You can't blame them for doing this. We just need to know how this is affecting the stock price. For MoonShot Money, there's a tremendous amount of confidence in these men and in this company. Palantir came on the market back in October of 2020 at $10 per share. That's where we bought the bulk of our holdings. While we thought Palantir's valuation was attractive at levels of about $10, in February, Palantir traded at about 40 times projected 2020 revenue. While this is still behind the likes of Datadog, which trades at 50 times estimated 2020 revenues, and Snowflake, which trades at approximately 150 times 2020 revenue, Palantir does have some unique risks that we are trying to keep an eye on. First, Palantir benefits the quickest from significant economic and political uncertainty. The COVID-19 pandemic and the preceding recessions that were likely the drivers of Palantir's growth. With the vaccinations now rolling out, things will hopefully begin to get back to normal, which could potentially hurt growth. Secondly, Palantir's revenues are greatly tied to government contracts, about 55% of total revenue, particularly in areas related to surveillance and national security. Palantir's most recent report indicates that the company is actually increasing its exposure to this space. They need to continue to add enterprise contracts quarter over quarter to balance out those revenue streams. Here's one of the reasons for you to love the Tortoise. Palantir recently announced that it has partnered up with Amazon Web Services. Listen, some have said that this is not a big deal. We want to get on record here by saying this is a huge deal. Just hide and watch. They had a great year with 47% year-over-year revenue growth for a full year 2020 and expect their revenue growth to continue building in 2021. Data is the new oil. Believe it or not, data is slowly becoming the most valuable commodity on the planet, and Palantir is exactly where it needs to be to take advantage. Data collecting and analyzing isn't going anywhere in the years to come. It's actually going to accelerate. Think about the Internet of Things and all the data that will be created. You cannot begin to fathom it. That's the reason the Tortoise or Palantir is going to win and win big. Karp recently said as much when he told short-term investors that they may want to look elsewhere.
We're in this for the long haul. If you are speculating or you are, or you're thinking about the short term, there are plenty of other things to invest in. We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs. My lawyers won't let me say more than that, but it's obvious. And if you want something else, it's a huge world. Buy some other stock. Yeah. You don't have to buy Palantir. No one's forcing you. We're completely liquid. Do something else.
Another reason to love the Tortoise. Palantir has become one of ARK Invest's most coveted stocks across ARK-K and ARK-W. They own somewhere in the neighborhood of 18 million shares. That's evidence of a money manager having some knowledge and conviction about what the next 5 years will hold. Not the next 5 weeks or say the next 5 months, because over such a short time, no one knows what's going to happen. The next 5 years will provide incredible returns for the patient. Palantir is likely to be one of those generational investment opportunities that you will be able to pass down to your children's children. Let's look at some partnerships for the Tortoise. In April 2020, Palantir signed a $10 million deal with Space Force, the space service branch of the United States Armed Forces. Space Force will use Palantir's Foundry software to integrate sensor data and track objects in space. In October of 2020, Palantir won a $91 million contract with the U.S. Army Research Lab, which will use Gotham and Foundry to integrate data and train AI models, expanding its artificial intelligence capabilities. In the commercial sector, Palantir recently announced a new partnership with IBM. The effort will integrate Palantir's Foundry software with IBM's cloud data platform, making it easier for enterprises to build AI-powered applications. These deals, and the dozens of others signed last year, should be substantial growth drivers for Palantir. For instance, IBM's 2,500 person sales force is larger than Palantir's entire business, so the partnership significantly expands the company's distribution capabilities. That is huge. That could help it win new customers across the range of industries, from retail and healthcare to telecom and financial services. We should be aware that Palantir is not currently profitable because it's investing heavily in growing its business. Does that sound familiar at all? Think Amazon. Sales and marketing expenses were 63% of total revenue in 2020, and research and development spending was another 51%. Because of this growth spending, operating cash flow came in at a negative $297 million last year. But, and this is huge, Palantir has over $2 billion in cash and equivalents on its balance sheet. Palantir is doing the right thing and can afford to lose money for several years while it's growing its business. It is a great strategy at this stage in the game to spend heavily on growth. As Palantir's customer base expands, the cash will come rolling in because of its 68% gross margin. And we are certainly not financial advisors, but to us, this seems like the perfect tortoise and the hare story. If you're into swing trading or day trading, this might not be your stock. If you're hooked on a get-rich-quick stock market gimmicks, you might want to look the other direction. But if you want to own a company who will be around for many, many years and will continue to grow your asset column, Palantir is a great choice. We have already put this investment in the MoonShot Money vault. If you're still here, you are amazing, and we appreciate you so much. Hit that thumbs up button and subscribe and ring that bell so you make sure and never miss another new video. We also would love to hear from you in the comments section as we try our very best to get back to each and every one of you. Earn more, save more, invest more, and give more. And remember, if you're not interested in your money, someone else is. Have a great day, everyone, and we'll see you on the moon.